Now, quite often I receive a pretty valid good question, and it's that if I could go back 8 or so years and start over in my dividend investing journey, knowing everything I know now, what are some of the top stocks or ETFs I would invest into, again, knowing all the things I've learned over the years. So in this video, we're going to make it simple, and I'm going to share with you 7 of my favorite dividend paying ETFs. Some are low yield, some are higher yield, but every single one of these dividend ETFs would be a part of my portfolio if I could, of course, go back and start over with everything that I know today. So if you want to see which 7 dividend ETFs could potentially be the best across the entire market, in my opinion at least, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first dividend paying ETF that I would without a doubt invest into, especially if I could start over, I would have put a lot more of my initial cash balance into this one early on, is SHD, or the Schwab US Dividend Equity ETF. Now, in the early days of my investing, I always heard people talk about these dividend growth style ETFs and say that they have a high quality basket of holdings and they keep paying more and more in dividends over time. But me being sort of a young knucklehead and not really wanting to wait to get paid more dividend income, I was chasing some of the higher yielding names in my early days of investing. And if I could go back, I definitely wouldn't have done so. Now, one of the main reasons I think SHD is one of the top ETFs to invest into, even to this day, is the fact that it has a cheap expense ratio. It historically, at least, has went up and to the right over time as far as share price, but also on top of that, it has a rock solid basket of holdings, 100 or so different stocks that all have been paying dividends consistently and raising dividends over time, which gives ETFs like this one a high dividend growth rate, or in other words, means you're going to get paid more and more in dividend income consistently, at least it has historically. Now, without a doubt, I always tell especially newer investors to look into some of the high quality dividend growth style ETFs, I guess just sort of like what I heard during my early days of investing. But towards the end of 2024 and moving into next year, I still think this ETF for a long-term investor is a great opportunity. Now, speaking of high quality dividend growth names, this is another one that's on my top list. This is actually an ETF that I've been buying a lot more of as of recently. I'm talking about VIG, or the Vanguard Dividend Appreciation Index Fund. This ETF is a little bit higher beta than that of SHD or some of the other names, but still offers basically everything a high quality dividend growth ETF can offer, meaning that the ETF has grown in price significantly over time. This one's up around 275% on the max time frame. On top of that, with VIG, getting a very high quality breakdown, exposure to things like technology, financials, and healthcare, making the majority of the ETF a little bit higher beta, and getting massive exposure to names like Apple, Microsoft, names like JPMorgan, Broadcom, names that historically have went up into the right significantly. But also, VIG is cheap to own, just like SHD, and also just like SHD, VIG offers a decent, sort of smaller dividend yield, but has paid more and more dividends over time, as you can see right here in the chart, up and to the right as far as dividend growth goes. So even if you're not earning the most amount of cash flow from day one, and trust me, I feel you, it's going to be hard in the early days to not want as much cash flow as possible, VIG and other high quality dividend growth style ETFs like this one are going to pay you more and more as the years go on. At least they've done so historically. Now, another one of my top ETFs moving forward towards the end of this year and into early 2025 is still Divo, the Amplify CWP Enhanced Dividend Income ETF. This ETF has been in my portfolio for several years now. Divo basically buys into a small basket of holdings, around 40 different stocks, all super high quality names in my opinion for the most part, and then sells covered calls on the basket. Now, by doing so, Divo not only has had upside, as you can see, around 60%, and this is over the last just few years, but along with that, Divo offers almost a 5% starting yield and a monthly paid dividend that isn't necessarily growing like crazy, but has been going up into the right over the past several years. Now, for those investors out there that want some yield but also want some growth, whenever I hear that, I always think about Divo. This is the first one that comes to mind because, again, it's grown a lot over the years but also pays a lot more yield than some of the other traditional, more low-cost funds. Now, for those that want a little bit more yield, a little bit faster, JEPQ, the JPMorgan Nasdaq Equity Premium Income ETF, is sort of the gold standard and or the GOAT as far as covered call style ETFs. Now, JEPQ is only up around 4.37% on the max time frame, but keep in mind when tech or the Nasdaq moves up, JEPQ has moved up a lot with it. But with that, JEPQ also pays around 10% trailing 12-month yield. So this ETF, even if it has a tiny bit of upside, has been paying investors consistent monthly income, which again might be higher or lower due to things like volatility volatility and option premiums, but JEPQ is a great option for those investors out there that want some exposure to yield but want it in sort of a more or less safe manner. JEPQ is a massive ETF with around 15.2 billion in assets under management, and across the dividend investing community, JEPQ is one of the favorites of all time. Now, another ETF that I would definitely add to my portfolio if I was starting today, and or an ETF that I think is sort of a top ETF moving forward, is definitely SPYI, or the NEOS S&P 500 High Income ETF. This ETF in the max time frame is only up around 1%, but keep in mind it's only been trading for a few years. Now, this ETF, although isn't the biggest as far as growth goes, it offers around a 12.15% trailing 12-month dividend yield. So at least historically, this ETF has paid investors anywhere from 48, 47 to 50 cents pretty consistently over the past several years as far as distributions go. Now again, if you're looking for more dividend growth focused names, this one along with JEPQ might not be the best options, but as far as those investors out there like myself that want at least a little bit of exposure to some yield, SPYI, as far as covered call style ETFs go, in my opinion, offer a great strategy and at least historically so far has done pretty well. Now, another one of my favorites, I have to include this one in here too. If I could start over / moving forward top names, DGRO, the iShares Core Dividend Growth ETF would have to be on the list. This ETF has grown like crazy over time and also has a really high quality basket of holdings. Something I like about DGRO is that it has a lot of stocks within it, 400 plus different names. So as you get older and you keep investing, you're probably going to want more exposure to even more diversification, because you're not really going to have time necessarily to watch over every single holding or every single stock within every ETF. So what's nice about with names like this one, even if 1, 2, 3, 10, 20 different names within the ETF have a bad quarter or a bad year, there's so many names in here that make up a portion of this ETF, which means you're probably more or less going to be fine. Now, DGRO has grown like crazy over time. Like I said, it's very well diversified. It's cheap to own, very cheap to own, that is, at 0.08%. And on top of that, as far as dividend income goes, around 2.25% trailing 12 month. But also, just like SCHD and VIG, DGRO has consistently offered a decent dividend growth rate, which has paid investors more and more cash flow, at least historically. Now, even though I don't own much DGRO as of right now, I would not be surprised if this turns into a daily buy in my portfolio pretty soon here. And I definitely recommend you look into this one if you're looking for some high quality dividend growth. Now, lastly, this is sort of a curveball, but for investors out there that want some exposure to some very high yield, I'm talking like 16-17% yield, and have a little bit more of an appetite for risk, SVOL, or the Simplified Volatility Premium ETF. This ETF basically shorts the volatility index, so as long as the market trades sideways and or up, which again, historically, it's done that a lot of times, SVOL is going to do pretty well, even though in the max time frame, SVOL is down around 15.8%. Now, that being said, this ETF is only down around 5% on the 1 year and has paid around 16% yield, so investors are still actually up on their investment if they bought it a year ago. Now, SVOL only costs around $21 per share as of right now and is offering around 30 cents pretty consistently as far as distributions to investors. Now, I would by no means ever make an ETF like this one a large portion of my portfolio just due to my risk tolerance and what I'm looking for, but moving forward throughout the rest of this year, SVOL is going to be on my daily buy list, and I'm going to add a little bit more to this one just to boost up my income until I get it to a certain point. So there we have it. Those are 7 ETFs, 7 of my favorite dividend paying ETFs to potentially buy or look into moving forward towards the end of this year and into early next year. Now, with the current turbulence in the market and all the volatility that we've seen over the past several weeks, anything can happen, and there could be some good buying opportunities, especially with some of these names that at least historically have been a little bit more pricey as of recent. But now that we went through all 7 of my names, I want to hear from you guys in the comments down below. If you could only hold on to one of the ETFs that I talked about in today's video, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.